Hey everyone, welcome back to POA for you. My name is Leroy, and today I'm going to go through the O-Level Examinations 2020, Paper 2, Question 2. Topic is on trade receivables, and hope this will benefit you guys. Now, if you think a friend of yours could benefit from this video as well, please share it with them. If you guys haven't already subscribed to this channel, please do that and turn on the notification bell, because if there's new content, you will be the first one to know about it. Lastly, if there's any questions or even a question paper you want me to try that you've been scratching your head on, please send them to me via this channel or email me at poaforyou@gmail.com. Email address is always on the top left of the sheets I work with. So without further ado, let's get right into it. Yeah? Alright, so in this question, we have a business that maintains a trade receivables and payables control account. First part of the question asks us two purposes of maintaining a trade receivables control account. Now, this is a 2-mark question and two purposes. So answers, expectations not going to be complicated. It's just going to be straightforward. And with this kind of straightforward answers, you can actually seek them out if you can't find them in your textbooks. On Google, right? And you can't find these kind of answers, then I'm just gonna Google it. Trade. The internet is so robust these days, right? And you can actually find a lot of information there. So there you have one answer here. Primary purpose is to act as an independent check on the accuracy of the sales ledger. This is done by using the totals from the subsidiary books in the control accounts to calculate the trade receivables and payables. Now, so this is one benefit or one purpose. But if you don't understand this, then what do? Right? First, you have to understand what a control account is, or how the mechanism of this control account works. And I think I saw a diagram on the internet that could be quite helpful. So this diagram actually tells us that, all right, there are a lot of invoices in the company, right, that a company has or issues. And the invoice, when you have a sales invoice that's credit sales, then normally the double entry would be debit accounts receivables, credit sales, right? Sales revenues. Now, what actually happens is, because there's so many invoices, the details of it go through these journals, this special journal, this sales journal, and then goes through a subsidiary account for trade receivables. And the totals of here would then move into revenue accounts, and the total of this movement for all these individual customers will go into the trade receivables control account. So in the control account, what you are actually seeing is not the details of what customer A and customer B buys and pays and all the different activities. You would see a total summary of the trade receivables movement for the entire company, for all summarized by all their for all their customers. So there's no customer details, no nothing, right? So that's what the control account has. Now, this control account would have information totals like sales. In here, you'd see sales is 800, and in the revenue account, you'd see that your revenue account total is 800. So in here, it actually tells you that, okay, my control account says my sales is 800 and my revenue is 800. So my sales information is correct. So that's one purpose that a control account will serve. And that's what this Google search was kind of alluding to. Part of the answers that I've drafted for you, I would say that it checks the accuracy of sales in the sales ledger by cross-referencing the sales total in the trade receivables control account, right? So if I look at the sales here, it's 800, and I cross-reference it here to this revenue account that's 800 as well, then I would say at a top level where everything is summarized up, excluding the details, most things are accurate. Okay, look at the control accounts. I could tell very quickly, the total cash that I've received is 445. right? From here, the total, let's say, discounts that I've given to customer A, B, C, D, E, F, G in total, if I add them all up, the control account would be able to tell that to me, because it's a summary of everything from different activities from different customers put into one big account. The purpose that I have drafted in for you, for me to get values, total values of specific activities very quickly, like total discounts for the period, right? Okay, now we come to the part B, which is the meat of the question, because it's 10 marks, right? So they've asked us prepare a trade receivables control account for the month of 2020, clearly showing figures for sales revenues. Now, if you notice, if you look through these different activities, there isn't a clear sales revenue number, right? And some of these are also not trade receivables related, but you need to only pick up those that are trade receivables related. So my first step, I'm going to ask myself this question: is this TR related? TR is trade receivables, yeah? And cash sales. So cash sales, is it trade receivables related? If you sell something for cash, then there's no trade receivables crystallizing, right? Because the double entry would be debit cash, you get cash in hand, and credit, or cash in bank, or cash in hand, right? Usually, and credit sales. There's no debit trade receivables credit sales. No such thing. So this is no. Discount allowed is normally given to credit customers, so yes, there will be trade receivables. Discount received is what you receive, and you normally receive it from suppliers, so that's not trade receivables related, so no. Credit purchases is you're buying from supplier, so that becomes a trade payable, so it's not trade receivables. Returns from credit customer, so credit customer is trade receivables, so this yes. Return to credit suppliers, no. That suppliers interest charged to customers, so anything customer related will be yes. Offset against trade payables. So this offset or contra is saying that the customer is also your supplier, he owes you something, you owe him something, so you offset that, right? So it's a customer related item, so yes. Bank receipt, yes, that's credit customers. Dishonored check from credit customers, yes. So that's it. And of course, these two are also trade receivables related. So now, after identifying this, we need to move all the yeses to the trade receivables control account. Now, this format is pretty standard. It's in your syllabus outline. So let's kind of put that in. We first put the year, and then we put June 1, right, for the month of June. And it always starts with balance brought down. Now you put in a debit, $, credit, $, and balance, $. So let's bring in the first item, balance. It always starts with balance brought down, right? And then balance brought down would be 5990. I have to 5990. So 5990 would be 5996, and this is debit. And I'm going to mark this a different color so that I can tell that I've moved it, right? Then I'm going to start with discount allowed. I'm going to leave a blank there, and you will see why later. Allowed. And discount allowed, this entry will be debit. Discount allowed, credit, trade receivables, because when you give discount, it would reduce your trade receivables balance, right? And the trade receivables is a debit in nature item, so if you want to bring it down, then reduce your trade receivables balance, then it's a credit to this. Next one is returns. So returns also will reduce your trade receivables, sales returns. So the entry is debit sales returns, credit trade receivables, which is 3750. And then I'm going to mark this as done. Then next one is interest charge. Interest is interest income, right? Interest income is credit in nature, and this would, if you charge your trade receivable, your customer something, it will increase the trade receivables balance, so it will be debit your trade receivables, credit interest income. And then the next one is offset contra. So offset contra is when your customers owe you something and you owe your customer something because maybe you bought something from them. So you guys decided that instead of having cash transfer to each other, you just offset the two balances, right? So it's going to be debit trade payables contra, trade payables control account, and credit trade receivables. That's the double entry. So I'm going to reflect this here like that. I'm going to take this out. And then the next one, bank receipts. So cash at bank. And then this will reduce the trade payables again also. Then dishonored checks, okay, is whatever the customers paid you, it got bounced back, right? Because let's say there's insufficient funds in the customer's bank account, so you got to reinstate that amount that has been bounced back to say that the customers actually still owe you this amount, so you debit it. Okay, so that's it. And then you have your July. Oh, I have to put June 30th here because there's no dates here, right? So I just used the last date of June, and then the first day of July I will have another new balance brought down because that's the ending balance of June 30th. Should be the same amount, and this is debit. Now, so in here, how if I just calculate this offhand, right? I take this, I plus the everything here, right? And then I minus everything here, okay? The final number I get is a negative 7617. So it wouldn't make sense, right? Because this balance, obviously you have to reach 7248. So the first transaction I will put here is sales revenues. So I will take the sales revenues that will increase the trade receivables balance because it's debit sales and credit sales revenues. I would take 7248 plus, right? And in here my formula I put minus because this is a negative sign anyway. 9617, that is my trade receivables sales revenues number, which is what the question is also saying. Show clearly the sales revenue number for the period. So that's my answer. Okay, and that's that part of the question. Now the next part is what is meant by a contra offset, and I may have mentioned it when I did this part of the question, but I've drafted something for you guys. It's when customer owes you something, you owe customer something as well, and you say no cash payments necessary, so we just offset each other's balances, and that's how you reflect it here as well. So you double entry again is debit trade payables because you bring down trade payables by doing that, and credit trade receivables, so you bring down trade receivables by doing that, so you owe less and they owe you less as well, right? The last part of the question, name the journal in which the following will be recorded: an offset entry like a contra and an interest charge to customers on late payments. Now, if you don't understand this, I'm going to Google types of journals, types of accounting journals. Oops. And they would tell me that there are basically 7 types, right? Purchase, sales, whatever, and then there's a general journal. So these are all, other than the general journal, the rest are special journals. So these two offset and contra entries and interest charge, they don't belong to any of the special journals, and therefore they should belong to the general journals. So if you look at the special journals again, purchase journal, sales journals, cash, purchase returns, sales returns, interest charge and contra hits none of these. So therefore, by elimination, it will go to the general journal. So that's where I have general journal as the answer. All right, thank you very much for spending your time here with us. And hope you enjoyed this. Remember, share it with your friends, and if you like it, give it a thumbs up. Keep your subscription notification bell on, turn on, and send me some content. If you want me to do work on something that you've been scratching your head on, then send them to me. I'll help you out. Okay? All right. Take it easy. Thanks for now.